Hi, it's Carl Ostenson, and I wanted to take a minute and give you a brief introduction to the email that you just received. And what we're going to call this idea is the $1 million baby. And it doesn't have to be for small babies. You can actually set it up for a teenager too. But the idea, we're going to call it the $1 million baby or the $1 million grandchild. And this is one of those things where after you see it, and you look at it, you understand it, and you see the numbers, you're going to say, man, I wish someone would have set one of these up for me when I was a little kid. So if you're looking for a way to give a financial head start to a child or a grandchild, this may be something for you to consider. So as most of you know, I sell life insurance. And typically it's to adults, once they have a family or maybe for estate planning purposes. But today we're going to look at life insurance in a whole new way. And that is, what happens if we set up a nice cash value life insurance policy for a child? Now, why would we want to do that? Well, I see two main reasons. One, the cost of insurance is really cheap. And two, it gives the cash value a really long time to grow for the kid. And you can start one of these for as little as $50 a month, or you could put in a lot more if you want. And you can make it a combination of grandparents and parents. You can set it up however you want. But what it's going to do is it's going to give the child 4 big things that they're going to need at some time in their life. And the first thing is it's going to give them life insurance. You know, even though they're young now, we never know what's going to happen. They may get leukemia or cancer or be in a car accident. You never know what's going to happen, or they may be uninsurable when they get into their 20s. You're at least going to set them up with some kind of life insurance policy now. And then eventually they're going to have a family of their own. And they're going to have enough things to worry about with car payments and mortgage payments and all of that. They're at least going to have some type of life insurance for when they have a family. The second thing is a cash value account. There's a cash value account inside these that grows tax deferred. And depending upon how much money is inside that account, they can use that money for college expenses or for a down payment on a new condo, or maybe to pay off some debt sometime in the future. So they get a tax-deferred growth cash value account. And the third thing, I think this is the neatest thing, is tax-free retirement income. You know, who knows if Social Security is even going to be around when they retire, and who knows what income tax rates are going to be. But life insurance enables you to take money out of the policy income tax-free. And once you see the numbers on the illustration, I think you'll be quite impressed. And then the fourth thing is money for a chronic illness. If they have a heart attack or a stroke or get Alzheimer's disease later in life, this policy enables them to actually get money out tax-free to help out if they ever get sick. So, summarizing, what you're giving them for a modest amount of money now, you're giving them in the future life insurance, a cash value growth account, tax-free retirement income, and money for a chronic illness. This could wind up being the best gift that you ever give them. So if you'd like to see an example based on some numbers that you can think of, or if you have some questions or you want to go through some of the fine print, please give me a call. My number is 847-376-8400. Thanks for watching, and we'll talk to you soon.